we got within a penny of 363. If we would be able to touch that, hold through that, close above that with a little bit of drought weather concerns, where does that go from here then?
Well, we're starting to settle in and define a little bit of a trading range. As you had mentioned, we just got a stone's throw away from the recent highs of last week. And if we were to get some good news, whether that be from the USDA tomorrow or hotter, drier forecast going forward, potentially that could spur additional short covering. And the next line in the sand, a resistance pocket that we'd be looking at, comes in closer to 370 to 374. This was support back there at the end of February and the breakdown point at the beginning of March. That would be the next line in the sand. And at that point for new crop corn, I think if you're a producer, you want to look at getting fairly aggressive on the sell side there. Now, as far as the support goes, we did test significant support, 4-star support in our morning reports. Yesterday, we labeled that as 346 to 350. 350, obviously psychologically significant, but is also the low end of the range from April 1st, and that became the top end of the range on June 5th, all the way through the middle of June, then the breakout point from last week's USDA report. So we're trading about a 15-cent range here. Hopefully we can get that move to the upside and spur some additional short covering in the near future.
I want to spend a little bit of time here in Chicago wheat also. 535, 200-day moving average in the September contract. We're at 529 3/4 now. Got up to 531 1/4. Starting to get kind of close here.
And we short covering. That's what we've seen here over the last two sessions. $5 was psychologically and technically significant. That was the lows from March 16th, and again, the lows from May 18th. We got a conviction close out above there yesterday and follow through today, taking us to the 50% retracement, or basically the middle of the trading range from the contract highs back in January. That's 592 3/4 and 471. So if you take those and divide by 2, it gives you the 50% retracement right at 532. That was also the top end of the range from May and June. That's going to be a big barrier here and a little bit overextended on the near-term chart. So I wouldn't be surprised to see the market stall out a little bit here and maybe pull back into the low 520s.
Oliver, final question before we get to the livestock then. Are you leaning one way or the other whether this will be a bullish or bearish report?
I am leaning towards the temper your expectations camp. I don't generally like to put a whole lot of weight into this ahead of the reports because you get different reactions on different reports, and it really just depends on what those numbers are. Total coin flip, I want to be optimistic, but cautiously optimistic, I guess, is the way to put it.